Good afternoon, everyone. This is Henry, and as we get into tonight's review, we're going to look at sector rotation. So on days like we had today, when the market comes in a good bit, it makes it a little bit easier to see this, and I felt like it a good topic for tonight's review simply because it is pretty easy to see. But when you try to figure out why was the market down, it's best to start with your biggest sectors first. So as we look here with XLK, you can see the 2% decline, the reversal arrow, and this very well may be a sector that needs to take a breather and come back in a little bit deeper to tag the 21 EMA. We also saw this in XLY, right? So with the move in Tesla, we're down 3.4%, but the thing is, the market often is seeing the money go somewhere else. And what we saw today was that movement was over into XLV and then into XLP as well. So it's an interesting spot because where I think a lot of folks might want to look at this and say, Tesla's due for a deeper correction and therefore the market is ready to top. I would say that these names could back up a little bit, but then you're going to see these other sectors begin to lead. So the way that I like to do it is if XLP has this pattern, maybe two things if we're going to be thorough about it. First is to look at the 618 retracement of this move, because the relationship of price to the moving averages to the squeeze, that all looks good. But I try to be mindful of the 618 retracement of the decline, really for resistance on the way up, and for then the second piece of that puzzle that says if this resistance is cleared, well then targets up here at 79 are where we will be looking next. So it's this type of top-down approach that then leads you into Walmart, right? So Walmart with the squeeze, mature in formation, shifting the histogram today and getting up through the gap fill, right? If you were going to find resistance, it would seem this would be a spot to do it. You can see the air through here, but it came up to fill that and closed near session highs. So provided the sector remains strong, I like a target up there at 160.78, and I think you could take Pepsi in that same vein, looking to see if we can get up into 191. So that is a big theme of what we saw today. As far as over into healthcare, Eli Lilly looks pretty solid. Also UNH. I want to give you something that is probably not actionable right now, but I would like to come back to it maybe 3 and definitely 6 months from now. But it is the thought that the low for UNH is in for the year. And why might I make a comment like that? Well, because of the pattern that you had heading into earnings. Not only do you have some relationships here with the fire line, which we'll look at in the premium video tonight, but even if you're not following these types of studies, you can look at it off of pure emotion. Because anyone that's over leveraged, anyone that's just not loving, holding this into earnings, that's the perfect opportunity to stop them out. And then when the numbers are actually announced, you regain all of that panic, and to me that's just a pattern that very well could be the low for the year. So we'll see if it gives a pullback, a place to actually act on it. Otherwise, we know reasons why the market can stay aloft while these magnificent 8 pull back, and that'll help us navigate as we get through the July expiration. So I hope you found the review helpful. Have a great rest of your evening, and I hope to see you in the rooms tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.